Hey folks, and welcome back to another video on my YouTube channel. In today's video, we will be talking about the ICT SMT divergence. The SMT divergence is also called smart money technique, and it is something that occurs on correlated assets such as the NASDAQ 100 and the S&P 500. And for Forex, that could be the GBP USD and Euro USD. Because those are all pairs that are correlated, meaning that they generally move in correlation to each other. So the SMT divergence is a trick that smart money uses to trick traders. What? How do they trick us? Well, I'll show you, okay? So in this example, we are going to be looking at the NASDAQ 100 and the S&P 500 because they are two correlated pairs. Okay, they move in correlation. So what I'm looking for when I look for an SMT divergence is a liquidity run on a specific high or low that only occurs on one of the correlated pairs. So if we take a look at my screen right now, I have drawn out two different charts with the exact same high, being this one right here and this one right here. The left one represents the NASDAQ 100 and the right one represents the S&P 500. And as you can see, NASDAQ swept the high, right? This high got rated, right, by NASDAQ, but not by the S&P, right? So the NASDAQ took out the high, but the S&P 500 did not take out the high. Okay, so this is what we would call a bearish SMT. This is the, this doesn't get simpler than this, really. You could draw it like this to make it easier for the eyes, right? The NASDAQ took out the high, the S&P did not, right? So this now becomes a bearish SMT, okay? And notice how if you were only looking at the NASDAQ, right? Let's do this real quick. Now we cannot see the NASDAQ, sorry. Notice how if you were only looking at the S&P 500, right? You and everyone else would probably think that this was where the next draw on liquidity was, right? We just failed to make a new low, right? We just had a market structure shift here, right? The draw for most people would probably be this high, right? That is a very reasonable area to place your take profit. But then you got stopped out right before we hit the high, right? And this happens to way too many ICT traders because they are not watching the pairs that are in correlation with the one they're trading, right? So right here, this does not make sense, right? A lot of people, if they were in a trade like this, will probably be like, yo, what is going on? This ICT guy's a fraud, right? But then you open their second eye, right? The NASDAQ. And this is exactly why the S&P failed to take out the high. Because the NASDAQ took it out before the S&P. And we created a bearish SMT diversion, right? Divergence, sorry. So that is it for the bearish SMT divergence. Now let me give you a bullish example. Okay, I can use this very same chart, but I could just do this. Sorry if you can hear my cat in the background. So in a bullish SMT scenario, it is the exact same thing, just with a low being swept. So if the S&P 500 sweeps a low, but the NASDAQ does not sweep that same low, that is a bullish SMT, okay? And if Euro USD sweeps a low, but the GBP does not sweep that same low, that is also a bullish SMT, and we could therefore anticipate higher prices or use it as a confirmation to go if we wanted to go long, right? So as you can see, the S&P 500 takes out the low, but the NASDAQ does not, right? So this is what we would call a bullish SMT. All because the S&P took out the low and the NASDAQ did not take out that same low. So this would be a bullish SMT, and ICT himself said that he found the SMT divergence because it often occurred right before a significant price move. Okay. So the SMT divergence often happens before a significant price move. So let me show you an example of a trade that I took earlier this morning that had a bearish SMT included. So let's look at that. Okay, this is the exact trade that I took this morning on the NASDAQ 100. So as you can see, we have equal highs being made over here on the 5-minute chart. And then I saw that the NASDAQ swept the high, right? But then I looked at the S&P 500 in that exact same area, right? So we can look at the time. This is at 05:15 and this is at 05:15, right? This is the same high on the S&P 500 as right here on the NASDAQ. So if I draw a line from the 05:15 candle right here or the 05:10 candle right here to the S&P high, we did in fact not sweep that, right? So this would be a, let's type it out, bearish SMT, right? So we had a bearish SMT because the NASDAQ swept the high, but the S&P 500 did not, right? And then I saw after the bearish SMT had happened that we inversed this fair value gap, right? I have a video on inversion fair value gaps. If you have not seen that, I would highly suggest checking that out. But this is what gave me my last confirmation, right? We got our bearish SMT, and immediately after the bearish SMT had happened, we violated a bullish PDRA, indicating lower prices, right? We had equal lows down here, okay? And because, as I said, the SMT usually happens before a significant price move, I expected this gap to act as a breakaway gap, which I, by the way, also have a video on, if you want to check that out. I expected this gap to act as a breakaway gap, and that is why I placed my entry right here as soon as we closed outside the bullish fair value gap, violating it. I did not expect this gap to retrace back into the inversion fair value gap because, from experience, after a bearish SMT, I expected we created a breakaway gap, okay? Which basically means that we are going to create a fair value gap that does not get traded back into because of such a significant price move, okay? So I entered here and I exited at the low, but I did not exit on NQ here. I think I exited around here on the NQ, or maybe here. And the reason for this is because the S&P 500 swept this very low, 645, swept this low. This low is the exact same low as this one right here on the NASDAQ, right? This is the same low on the S&P 500 as this one on the NASDAQ. So as soon as the S&P 500 swept this low, I exited my trade, right? Because when the S&P 500 swept this low, the NASDAQ had not swept it yet. And what would we call that? A bullish SMT, right? So I used a target on the S&P 500 to exit my trade on the NASDAQ because the S&P 500 swept the low before the NASDAQ did, okay? And I do not want to be in a short position right after a bullish SMT, right? I'll put the video up on the screen right here. And that was basically the trade. So I just wanted to show you proof that I actually took this trade. And that I exited because the S&P hit the low and not the NASDAQ. So that was all I had for you for the SMT divergence. It is a really, really essential tip to know when you are trading these correlated pairs. I'll put up a list of correlated pairs up on the screen in the end of this video. In case you're confused on what pairs are correlated, it's fairly simple. On Forex, if the last currency is the USD, all the pairs that have the quote currency as USD are correlated. So the GBP USD are correlated with the Euro USD, right? The AUD USD are correlated with the Euro USD, right? But it is a bit more significant with the NASDAQ and the S&P. So, and this is what I trade, so that's why I showed you an example on here. So that is basically it for the SMT divergence. I hope you enjoyed. And I hope it was helpful. And as always, I appreciate the feedback. And until I see you next time, stay blessed and bye-bye.